This is the Iron Trader, and this is the weekend edition. Now, today we're going to do something a little bit different. I'm going to share with you guys here on some of the tips and tricks that served me well here over the years in trading. So we're going to review all that, and we're also going to look at some charts, and we're going to go over the basics on those charts. And then we're also going to look at some seasonality charts here for the Dow, the S&P, the NASDAQ, for crude oil, for natural gas, and so it should be pretty cool. This video is for information purposes only, not a recommendation to buy, sell any stock, commodity, ETF. Please like, subscribe. Thanks for watching. Okay, first of all, we're going to go over and how I got started trading. Okay, I took a course in high school. It was a finance course, and they showed everything about the businesses, and then they had stuff on there about stocks, and it really caught my interest. And I found out that, that year and the next year here that I was always leaning towards the financial sections. I was looking at stocks and everything like that, anything that pertained to the finance. It really appealed to me. And then a couple years as I got older, I had a couple of businesses, and then I said, geez, I'm going to open up a trading account. So I started with a trading account, and I figured it'd be a good side hustle. But what I did is I started off slow. And if you're a beginner, this is a good way to start. Okay, so what I did is I just did like paper trades first, and then try to get the whole feel of what was going on. But I always traded the charts because what it is, it takes the noise, the emotion right out of the trade. Okay, and nowadays, with the chart, with the way the charts are, you can do pretty much anything that you want. Okay, so what I did is I just came up with a plan that what I need to do is make $50 a day. So I figure if I could make $50 a day, well, for the week I can make $250. For the month, I could make $1,000. Well, that's a pretty good side hustle considering I had other businesses at the time. So that's what I did. And then, a couple, 3 weeks down the road, I increased it from $50 to $75. And then down the road, I increased it to $100 a day. And I'm thinking, geez, $100 a day, if I do it every day, that's $500 a week. Okay, that's $2,000 a month. Now, the key to trading, okay, I've always found out, is consistent money. Okay, I see a lot of traders, and I talk to a lot of traders, and they say, geez, I made $3,000. I made $5,000. I says, geez, that's good. I says, what did you make yesterday? Why didn't make any yesterday? Well, what did you make the day before? Why didn't make anything the day before? Well, see, that's not how you want to trade. If you want to be a good trader and last for a long time, what you want to do is you want to make consistent money. Okay, so what you do is just, if you're beginning, start off with trying to make $50 a day, and then boost it up to $75, $100 a day, and then down the road, as you get better and better at it, set yourself a goal. Like say maybe, hey, I want to make $500 a day, or $1,000, or $1,500, but never get yourself into a situation where you say, man, I don't know if I can really do this. You know what I'm saying? That's too much money a day. Then you just cut it back. Always something here so where you're not like forced into a situation, because when you're forced to trade, you're forced to do this, that's when you make mistakes, and that's when you create these losses. Okay, and that's something that you really want to stay away from, okay, is the losses. So that's what you want to do, is just start off slow. Now, again, every trader will get into a slump, and they say, geez, I just can't produce this 1,000 a day. I can't produce the 500. I can't do this. Then what you do is you cut back to your basics again. So say your target is making 1,000 a day, okay? Then you cut that back to $100 a day. And then what you do is you keep trading that same. And then what you do is you get back into the flow, and before you know it, you're right out of your slump, okay? So that's basically what it is for me. Now, I turned that basically my trading, that side hustle, into a full-time business. Now, I've been a full-time trader here now for over 20 years, okay? So that's what I turned it into, but just starting off with that basic plan of 50 a day, and then just increasing it slowly and slowly and slowly. So then you can, you have the option to say, hey, how much money do I really want to make? But set a realistic goal for yourself here. Don't just say, hey, I'm going to make $10,000. But the traders that are fly-by-nighters that come in there, they'll make $5,000, $10,000. I made 20 grand. Yeah, and then what they do is, I said, well, what'd you make after that then? Well, I lost this. Well, I lost that. Well, I'm not doing nothing here. See, that's not what you want. Consistency is the absolute key here on the trading. Okay, the next thing that you want to do on trading is you have to have that mental really sharpness. Okay, so you want to make sure that you really stay tuned. Okay, you don't want to come into your office and say, "Geez, I'm hungover. I don't feel like doing this. I don't feel like that." You can save that for the weekend. Okay, so you want to be mentally sharp. Now, what also served me well over the years was being in really good physical shape. Okay, I've been working out basically my whole life. Okay, I played all kinds of sports, all your basics, your baseball, football, basketball, all the way up to racing motorcycles. Okay, and everything in between, golf, tennis, whatever, I've always done. Okay, so what I do is keep myself very physically fit. Okay, what I do is I spend 2 hours a day in the gym 5 days a week. And then on the weekends, I do at least an hour of cardio on Saturday and Sunday. So for me, working out is a 7 day a week deal. Okay. So even on the cardio, I'll get on a spin bike, I get on a treadmill. It's nice out. I go for a mountain bike ride, anything like that that keeps that blood flowing. And then during the week, I do a lot of weight training. Another thing that you want to do is have yourself a really good diet. That is very, very key. Okay. I know a lot of people, they want to eat the fast food. If you ever do any research on this fast food, it's complete garbage. Okay. I was just reading something here on Subway where they can't even classify the bread as bread because there's so many additives to this. They don't even know what this is. That's the same way with these Frosties over to Wendy's or whatever that is. There's like 22 ingredients into making it taste good. That's nothing but garbage food. Okay. What I do is I have that Mediterranean diet. That is key. Another thing you want to do is you want to get yourself some really good sleep at night. Take everything off your mind, get a good rest where you'll come into your office and you're very, very sharp. That is another thing that you really want to do as far as the trading goes. Okay, another thing what you want to do is create yourself a balance. You don't want to just say, I got to work all the time, I got to do this. Create yourself a balance between your work, your family, your friends, and your relaxation. Okay, always have an outlet. Okay, like for me and my wife here, what we like to do in where I live, we're not that far away from Silver Lake sand dunes. Okay, so what they do is they have the whole lake. You can go kayaking, you can boating, you can go parachuting. We also have off-road vehicles here. We go there, we blast the dunes, have a great time. Takes everything right on off. Sometimes in the summer here, I got a couple of Harleys. I'll just jump on that bike and I take a nice ride for a half hour, 45 minutes. Where I am is nothing but wineries and water. And basically all I do is focus on the road and the scenery. Okay, something to take your mind clean off. So always create yourself a really nice balance, no matter what you like to do. Okay, so also like to golf and to jet ski and to play tennis and whatever. We do a lot of mountain biking too. But what you do is you just take something where you create a balance between your activities, your work, and your family. Okay, that is very, very important. If you focus on one thing, then you have nothing else to look forward to. So always remember, balance is the key. Okay, now when I walk into my office, I basically have 3 rules. Okay, one is I have no opinion. Okay, I don't have opinion on anything. Okay, if oil goes up, if oil goes down, I have no idea. This is why I trade the charts. Okay, never glued into one stock that says, hey, this stock is great here. I just love it. I got to have this thing. It's going higher thing. Have no opinion on anything. Absolute nothing. Because that can really kill you. I'll give you an example. Say a stock falls down, okay, and it just gets hammered. People do is they say, I got a position higher. I'm just going to keep buying lower. That is never what you want to do. You take your stop loss. You take what you can that you can manage to lose, and you get out of the trade. If you like that stock, wait till it comes down to support levels. That's what you want to do. When it comes down to support, you can buy it again. Okay. So basically, never have an opinion on anything. I don't care when you're trading that trading room and you're in your office. I don't care if it's politics, if it's the weather, whatever. Have no opinion on anything. Just trade the charts. Let the charts tell you what to do and where to go. Next thing is no excuses. Oh, I should have done that. Geez, if I only did this. No, you don't have any excuses. You fix it. Okay. If you make a mistake, okay, then the next time you look at that mistake and you don't make that same mistake again. No excuses. And the third thing here is no feelings. Okay. I'll give you an example. Everybody liked the Sears Kmart. Oh, stock ran up to $100. Oh, I think it's gonna, this stock here, I just shorted it right down until it went down to the pink sheets. I don't care if Sears go. I don't care if any company goes out of business. If they rally, not. The key to trading is have no feelings at all. All you're here to do is make money in both directions, wherever that stock is going to go. Okay. So remember, no opinion, no excuses, no feelings. So when you walk into your office, you leave your emotions at the door. That's where they belong. Again, when you're out of your office, you can do whatever you want. When you're trading, you're here for one thing, to make money in both directions. That is the key. Okay, now what we're going to do is we're going to go over, take a look at some charts. We're going to pull up an oil chart here first, and we're going to go over the basics on basically SMAs, simple moving averages, price channels, different kind of patterns. And then what I do after that is we have different things, like I'm going to show you what candlestick patterns and breakout patterns. So we're going to have a lot to look forward to. Okay. Okay, here we have a crude chart. Okay, so I always talk about SMAs. Okay, your 8 SMA, 21 SMA. Maybe a lot of people don't understand what the hell is this guy talking about. Well, this is how I set my charts up. This is an 8 SMA. Basically, what that means is the average over an 8-day period. 21 day is your average over a 21-day period. Okay, then we have your 50-day. That's an average over 50 days. 100-day is average over 100 days. 200-day is over what is the price average over that 200 days? Okay, that's the simple averages I've always found out work very, very good. Now, you also have moving averages. Some people, they swear by them, and that's fine. Okay, that is no problem. Okay, but that's not how I trade. I just been doing this for a long time. I've had so many indicators here and there. I just found out if you keep things simple, okay, that's how you make your money. Keep things simple. The other thing I do is I put on here is price channels. Okay, basically price channels are just the highs and lows, okay, of the recent highs and lows. Okay, so if we look at here at this bottom of this candle, what do we have? 71.41. Well, what is your price channel? 71.41. That just basically gives you what that low was. Okay, we'll come over to this candle here. You're looking at 70.50. Okay, take the price channel across. That's what we have. We'll come over here to this candle, 69.28. That's what we have there on your price channel. Come right across, okay? So this is what you always want to watch, okay? So when we look at this chart here, like on the crude oil here, okay? So what we have, this candle was in play. This was that 79.29, and that brought that price channel right across. And then what it did is it went up here higher to that price channel is now the high of 78.03. Okay, so then we just look at the top of that candle. Okay, 79.03. The price channel there is 79.62 is what I'm saying. There's your top of your candle at 79.62. Okay, so basically your price channels are just your highs, okay, and your lows. They work very, very well. So when this comes right across, you're right there. So that what we have here, like on the downside, where it just sold right off here, your price channels follow. Well, your ones on top follow along with it. So then when you get a breakout like we're going on here with the crude oil, we just follow this right across. But it's easy to say, geez, what was he talking about? Well, when you bring this price channel right across, all it is the top of that candle. It's the same way here. You bring this price channel across, it's just the top of this candle. Same way here. See, it's just the top of the candle. Same way as the bottom. And that's all it does. Now, there's many other indicators. You have clouds, you have Bollinger Bands. I've used all them. Price channels really are, in my opinion, are the best. They just basically are just an easy way. I can look at this chart and I say, wow, there's the breakout level here. If you get above that, then you can go higher. Okay, this is the same way with these SMAs here. Okay, so SMA is just simple moving average. Okay, RSI, I just use 3 indicators. Volume, you always want to see what the volume is going. That's always key. That's just like standard. Okay, RSI is always very good because that's your relative strength index. Okay, that shows you, hey, this is going up in an area here that has a lot of strength. Okay, that's what you're looking at. In the same way with here, your MACD basically measures your momentum. Once that green gets above that red, that just shows that you got momentum and you're going to go up higher until it comes back down again. So these indicators here, your 8 SMA, your 21 day, your 50, 100 day, 200 day with your price channels is perfect for the chart. And then you have your volume, your RSI, and your MACD. They all work very, very in tandem together. You don't need, I mean, I used to have these charts set up here. Man, it was just like I had to have a microscope to see all these indicators. And it was getting very, very difficult. So I said, geez, if I just cut this one, do I really need this? I cut this one up. But again, these are your basic ones and they work very, very well. Keep your trading simple. The more simple you have it, the easier it is to see, the easier it is to trade, the easier it is to make the money. Okay. So now let's just look at some patterns here. Okay. So basically here, when we had this sell-off, okay, I want to just show you, and we're going to show you another example of it. But here, you see when you have a red candle, this is the perfect one right here. You see when you have a big red candle, and then it runs right on up here, but it couldn't get above that top of that candle, that 72.60. That is a perfect bear flag. So you always want to watch those bear flags. See what we had there? You had a nice bear flag here, even though you went higher, you couldn't get above that candle there. So that's what you always want, a bear flag, and then she came right on down. Then she rallied right on up. See, that's what you always want to look at. Another thing is you want to look at is like double top. Now, this is a perfect situation for a double top situation, okay? So you had 79.77, and then we had a lower high, 79.60. When you see this pattern here, that tells you right off, I got to get short because this is a double top. Now, again, if it closes back above that 79.77, then you negate that pattern, then she'll go higher. But when you see this, and especially with a lower high, you know that's just going to come right down. So you can make the money going all the way there on the short side. Now, as this is just rising up here very slowly, there's what you look for. Where you have a low, and then even if it comes down, you have a higher low, a higher low, a higher low. That is such a bullish pattern. You want to go bottom left, upper right. That's what you want. You don't want this. Upper left, lower right. Okay, that's just the opposite unless you're short. Okay, if you're short this trade, then that's a whole different thing. But if you're long, this is exactly what you want. And then what you want to do is just focus on here where I always point out this rounded bottom. When you see that, and then you see this neckline coming right across here like this, when this breaks out, you're going to get yourself a good 8 points here, which could take you right up here very easily here to the $90 area. So then when we look at this, say, okay, now what we'll be looking for here is you look at the top of this candle at 80.85. So when like the futures open here tonight at 6 o'clock, you want to see, hey, can it go above that? And then, is it going to go below that? Or is it going to stay in the middle? But once you get a breakout above, then what we do is we just keep going to these next levels. So you can follow the candlesticks up, but if you just bring your price channels across, that is going to be what your big targets are going on to the upside. And then you have a big retest there at 95.03. Now, candlesticks are really, really good because what it is I've always used these. I've tried the other ones. They're just doesn't work. There's other ways to do it. But this is what I like because you always look at the high. Like take this candle here. The high is 76.59. And then your low is 73.56, and then you have 76.46 on your closing, okay? So that gives you your support, and that gives you your resistant levels here all in one candle, okay? And then those are like, I use those for like minor support and resistance, and then your SMAs here, simple moving averages, for your key levels here of support and resistance. So when we look at this pattern here like this, okay, so we had all these candles going up here, but now look at this 8 SMA here. Okay, see how nice that is on a closing basis. Even if it comes lower, you're holding that 8 SMA and that 200 SMA. That's very, very bullish. That's the key. Even like when this sold off, the red candle came down. What did it do? It held the 21-day, held it. This one came lower, but what did it close? Above that 21-day. So this is all the kind of things that you have to always look for. Okay, and another thing is too, like here's a classic double bottom. You had 75.54. And then it ran up a little bit, came all the way down here, held that 21-day, and what do you do? 75.52 and a nice big green candle. See, that's a classic double bottom that tells you that this is going to go higher or sideways or something, and look how nice that it is. So the candlesticks are really good. Just always watch the previous day's high, low closing. So basically here tonight, I'll be watching your 80.85, your high, your 78.05, and then your closing number at 79. 81. That's what I'll be watching here. And then I say, if all of that is lost here, then you can come down here to your nice 8 SMA here. You're looking at that. And you can come over here to your 200 SMA. And then if that's lost, you have a nice 100-day. You have your 21-day. And then we can start following the bottom of these candles, which is 75.84. You have 75.52. And then we come right down to your 75 flat, which is your 50 SMA here. Okay, so that's basically how you use candlesticks, and that's basically how you trade. Now, what I'll be looking for here is to go that 80.85. Once we close above that, then you can take really, really long all the way through. Now, I'm the kind of guy, I do multiple trades, okay? So when I say I scalp a trade, basically scalping is day trading, okay? You buy low and you sell high, okay? So when this candlestick, say a candlestick like this came down and you hit a low of 75.84, well, you wait till it gets back up to over the 21-day, and then you run that all the way up here, okay, to your 78.03, okay? So that's what you do. That's basically, a scalp is a day trade. That's all it is. Now, I am a man of all trades, okay? So I have stocks that are out there, from a year, 2 years, up to 5 years ago that I bought them. Well, the reason I keep them, first of all, is they're going out to the upside, but I also get a dividend off those stocks, okay? Now, swing trading. I also do swing trading. I'll give you an example. Apple stock, okay? Apple stock is a beauty. I do that 4 times a year on Apple stock. What I do is I buy the stock 2-3 weeks ahead of earnings. I buy that stock, and then the day of the earnings, I sell half the position, and then after hours here, I'll sell the other half position. And that's your swing trade, okay? So I take the long trades. You can go a year, 2 years, 5 years. Some people go 10 plus years, okay? But like on swing trade, you want to go a week, 2 weeks, 3 weeks, and then dump it out. And a day trade, which is basically a scalp trade, is every day for cash flow. So if we look back to the beginning, what I was talking about here, on that $50 a day or $100 a day or $1,000 a day, that is why I scalp, so I can make that amount per day, okay? So I can keep that Monday, Tuesday, Wednesday, Thursday, Friday, all that money going every day, okay? That's why I scalp a trade, and I also swing a trade, okay? So right now here, I am long the USO. I've been long all the way from this area here, okay? Ever since we put a bottom in here, the next day I bought USO. But I scalp the UCO every day, and the SCO, long and short, on the crude every day here, okay, until we get out of the seasonality. Because seasonality on crude, you're going to have your Memorial Day, your 4th of July, your summer driving, Labor Day, and then you got hurricane season all the way into end of September, okay? Now, hurricanes, bad for people, no question about it, but it's good for traders if you're doing oil and natural gas, because they shut down the rigs. You have a supply and demand issue again here. So that's where it comes in when you're trading of no opinion, no excuses, and no feelings, okay? So when you have these hurricanes, you say, okay, I see a big hurricane season. How am I going to make money off of this? Now, again, it's nothing personal. This is just trading. I feel terrible for the people who are in there. Don't get me wrong. But when you're trading, you have to look at it a totally different way. Hey, we got hurricanes coming in here. If I go long oil, go long natural gas, we shut down these rigs, I'm going to make some money off it. That's how basically how things work. So we went right over scalping. You basically is just day trading. Okay, your swing trading is like anywhere from 1 to 3 week trading, and then long term is like over a year. But always have a reason if you want to have a long term. Okay, so you always want to at least collect a dividend, something on that order. Like for me, I have the XLE, which is the big oil ETF. Well, that pays a 3.5% dividend, and I know going to this time of season here, that's going to work very, very well going into the summer driving, in the hurricanes, in the whole 9 yards here. So see, that's a perfect example of what you actually want here. Now, a couple of these candles here, which we want to look at here is, okay, like this candle. Okay, so basically we had a big red candle, and when this candle came down, everybody said, oh, this is short, I'm going to go short. This is basically a red dog candle. A red dog candle is when it goes below the previous day's low, and then it closes green. And then you say, that's your buying opportunity to go higher. So always remember red dog, okay? Very, very key, because that's basically like this, and everybody gets short and say, oh man, and then what it does, it reverses, and then you have a nice green candle, and then you're making money. So always watch for those red dots. Always watch for these bear flag situations. Always watch for a situation like this. Perfect double top situations going on. You know that's going to come right on out. Now, right here, what we have here, you don't have a real clean breakout, but we have a nice breakout. So I'm going to show you another chart here on TQQQ where we have a nice breakout going. Okay, TQQQ, this is one of my favorite. Okay, this has all that Mag 7 in it, plus it has Costco in there. Really, really good trader here. Very, very, this is one of my favorites. I'm long, and I also scalp this every day. But see, this is what I'm going to show you here, which is a nice clean breakout. See this price channel? You're looking at 61.22, and look how that popped right up. Now look at, okay, how much energy that had off of this sideways action. So we look at the low, you had 60.73, and then you look at the high of 63.51. So you had just about 3 points here pop right on up here on this green candle. So now when the futures open, we have to see on how that is going to work here now. Okay, so another thing what you always want to do is you want to look at, you know, divergences. Okay, so when you look at this candle here, and then we see a real high, and then you see an even higher high, and you see a lower high. That's a negative divergence going down there. And then what happened? Okay, it came right on off here, and then you just follow your RSI off here. So always look for these divergences here. That's always something that you always want to see very clear. Now I'm going to show you another couple divergences here on another chart. Okay, this is the XLE. This is the big oil ETF. Now, this is how I trade the big oil because it has everything in there. Exxon, Schlumberger, Phillips, Conoco, you name it, it's basically in here. And this pays a 3.5% dividend. So let's just look at this chart. See where you have a high, lower high, lower high, lower high on the way down. Same way with here, okay, low, lower low, lower low, lower low, okay? But when you take these all the way down here, what do we see? You have a low. And then what we see here, you have a higher low. And then we even have a lower low there, and we have a higher low. See this positive divergence. You always want to watch that, okay? Very, 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 very key. Now, same way here on your MACD. See how low we have here, okay? And then look in the middle. But look at that, higher low. Really low, higher low. See that positive divergence? That tells you that it's going to be a matter of time before this is going to bottom out here and she's going to rip. Now, another pattern I want to show you is this inverse head and shoulders. See right here, left shoulder, okay? We have a head, and then we have a right shoulder. Inverse head and shoulders. So basically what you do is you take the bottom of that candle, okay, which is basically 78.98, and then you take this neckline right here, which is basically your 85 level. Bring that right across, and then you flip that over, okay? So you have, what do you have there? Okay, you got 78.98, so roughly 79, and then we have 85, okay, is your high. So what do you got there? Okay, so you got 6 points. So basically, if you look take this top of this here price channel at roughly 87, you add 6 points to that, and that takes you right back up again. You just flip that upside down. So always look for patterns like this: left shoulder, your head, and your right shoulder. Look at the bottom, look at where your neckline is here, and then when that reverses, okay, she's going to go right up there big time, possibly retest that 93.69. So watch for that. Watch for these divergences. That tells you something that, hey, even though it's going down now, eventually this is going to go right back on up here. Okay, so let's just look here at a couple more charts. Okay, here we have trading patterns. Okay, so you might want to just take a snapshot of this here. So this gives you a lot of how to really trade in different kind of patterns. See, this is that double bottom situation where you go up, comes on down, and then she just rips up where you have a nice bottom. This is that inverted head and shoulders that I just pointed out to you. We have your left shoulder, your head, and your right shoulder. This is what's on that XLE right now. You see how this is going down, but okay, your RSI and your MACD was showing you a positive divergence, and then look what happens, okay? This basically is a bull flag. When you get a candle, a light candle going up, and you get a flag going on the way down, that's always a bull flag. Same with the bears. When I showed you the bear flag, when it comes down and then it looks like it wants to work up, that goes all the way on down. See, bearish channel. Okay, so here's your inverse head and shoulders, where you have a high, and then you pop right on up here, and then you come back and you retest that high. You don't have to be really exact, and then she comes right on down. Same way with the old double top. Double top, basically same inverse of the old double bottom. Okay, and then we have a bullish triangle, so where it just goes sideways. This is what's happening with crude oil right now. Basically sideways action, and then boom, there she goes. See, another bullish pennant where you tighten up, okay, and when it gets tight, she can break right on up to the upside. It can also break down like we have here to the downside. And then we have a nice triangle here where you basically have a bull flag, and then she just keeps on running right on up. Falling wedge, very, very nice, okay. It comes right on down. It's almost like a bull flag-ish, and then she just rips up higher. Then we have rising wedges here. These are never good. This is almost like a bear flag. So when you see that candle, it comes on up here, and then she just comes back down, and then you retest that trend line, then she goes all the way down. Same way with the bearish triangle here, pretty much like a bear flag situation, except it's more of a flattened out pattern. And then we have another bearish pendant here, because you don't want this kind of a pendant. You want the bull flag if you're going long here. Now we have a triangle here where you're up here. This is what's going on. And then you can come all the way. Once you bruise that support underneath, then she comes all the way down. Now you come up there and retest it, but she comes all up. It's just the opposite of what we have the old bullish flag going, like we have in crude oil right now, where she wants to pop to the upside. So take a good look at this. Now we have another chart here. Okay, this is basically your candle. So you want to really take a look at this here. So, and this shows you exactly where you have basically where you have your breakups, your breakdowns, okay? So when you have like 3 black crows here, that tells you exactly what you want to do. You got a hanging man. See this here? I always call that a topping tail, but hanging man is basically the same thing. When you get this here, that's really never good, okay? So this is like a bearish pattern. So you want to just take a look at all these different kind of patterns like this, and you have a lot of stocks doing this here. You're on a run on up here, but eventually that's going to come right down. Now this is what's happening right now here with this tech stock. Now the tech could run higher, no question, okay, but eventually this is what happens, and then she just comes flying. And once you lose that trend line, she comes all the way to the down. Now when you see this, you see those 3 candles. That's almost like a bear flag. And then you'll have that big drop on the one day here, okay? So there's your bear flag, obviously, and then she comes right on down. And then your descending triangle, where you see keep it coming on down, and you just don't have no momentum over that trend line, and then she just pops right on down. So you say, oh, I want to buy it here. No, no, no. Always wait till this bottoms out here before you take any kind of a trade, okay? So inverted cup and handle here, yes, okay? So you basically have your cup, and then here's your handle, this little handle here. Now you can do the reverse of that, and it goes on up here, but this is here your cup, and then your handle, and then she comes right on down. Okay, bullish is just the opposite. Your cup is basically on the bottom, a handle, and then she rips higher. Okay, double tops, that's a given. I showed you that many times here, and then she comes flying down. A triple top, okay, where you go up, it retests, and then you say, okay, now this could break out also. So you have to be very careful here, because it closes above that trend line, then she rips higher. But when you get that triple top situation and you see a sideways action where it just can't get through and it starts selling off, get the hell out of it, because she's going lower here, okay? So then you have your head and shoulders pattern, your left shoulders, your head, your right shoulders. Boom, that's never good. That's also going right on down. Okay, let's look here at some seasonality charts. Okay, first of all, here we have crude oil. Okay, so realistically, you want to sell it right here the first 3 days. So you can see in December here, okay, where it basically bottoms here in December. And that's basically what it is the reason it rallies up here is all the taxes and everything are all set here. So what they do is they hide everything they can and do whatever they got to do and then run right on up. Now, nobody's going to tell you that, but I do. Okay, and then you always want to buy it the first, second week of December, run it all the way up here until the January. Then it usually sells off, sideways action, and then until it is here like what's going on now. Now you have a nice breakout, okay? So basically what you want to do is hold this. Yeah, you get a little bit pullback, but that's really minor here. So I'm always long from this area. I hold right through this, but then that's why I take the UCO and I scalp this every day here. And then what you do is you start getting your May, June, July, and you're really good here all the way till September. And then what you want to do is you want to start getting rid of this here, because when it starts selling off here, basically, I mean, nobody's traveling. Okay, your kids are in school. This is that, and that is always gives you a nice, good shorting opportunity to come all the way on down there. So take a look here at you can always punch up equityclock.com and you can get any chart that you want here on anything. All right, let's take a look here now next at natural gas. Okay, natural gas. A lot of people like trading on natural gas. Now, here we had in February, you can see where it sold right off. And then we had a nice good rally up here. Now, realistically, you want to buy it here starting here in March. Okay, because a lot of people think, well, okay, natural gas here, winter's over, not gonna. Well, not really. The most natural gas that is really used, and nobody wants to tell you this, is the summer. Especially if you have a hot summer, these power plants got to get fired up. You got air conditioners, right? I mean, running. People want to get that cooled. You got to have a lot of juice here, and you got to figure your power plants. The majority now are natural gas. Okay, I mean, just look at what the alternatives. Okay, so you look at coal. That's too dirty. You look at nuclear. I like it, but not in my backyard. Okay, so then you have wind and solar, which is really about 18, 19%, but you can't really count on it. It's like the electric car. I can't really depend on it. So really the cleanest thing is going to be the natural gas here. That is going to be key. Now, again, if they can pass this, overturn Biden's and Granholm's hold on this LNG here, the natural gas is going to have a nice, good rip up here. So don't give up on natural gas. Even if it comes down a little bit, this is always a buying opportunity. For me, it's a good scalping trade until we can just rip right on higher. So then you want to basically hold this here all the way till the end of November, because then the futures contracts come into play, and that's where she sells right on off. Okay, let's take a look here at the Dow. All right, here we have the Dow. Now you can just go here to equityclock.com, like I said, and punch it right on up. All right, what do we got here? Okay, so your Dow here, your basically bottom runs right on up here like we've had. And then usually in March, it wants to sell off. Okay, so then what you do is you come up here, you have a nice good run, and then you run all the way on up here. Depends on what we have going here in October. October is usually a really bad month, okay? So you get some sideways action here, and then what you always want to do is buy it at the end. All that nonsense is done, and then we have a nice good run right on up here into December. So you can take a look here if you're trading the Dow here. It gives you a good look here on the whole seasonality there chart. Okay, and next we're going to look here is at the S&P. All right, here we have the S&P here, pretty much the same kind of a situation, okay? You basically, if it comes down here in this March time frame, then we can have a nice good run up here. But again, watch this, see, because you look at the same pattern here, okay? So you'll be pretty much here flatlined until you get to the end of October, then you want to run it right on up here. So this is basically the same as what the Dow is. But you can have a nice run up here from March going all the way on up here. And then sometimes you get that summer rally going here, which is nice. But always watch this key area here. Now, August, September, October, that's always very, very bad months. Once that is done, then you always want to take a trade at the end of October and run it right on up here to the end of the year. All right, let's take a look here at the NASDAQ. Okay, here we have the old NASDAQ. Now, see, you can see it's pretty much the same thing. See that March time frame? Now remember, these charts are here over a 20-year range. Now everything doesn't play out exactly, but just kind of watch it, especially this NASDAQ. You got to figure with this Mag 7, a lot of this stuff is getting pretty much out of control. Like Apple is not, Google is not, but you look at the Meta, and I get the whole AI thing. I get all that. The only problem with that is with these stocks running up this quick and this fast and hard, usually, if those earnings and everything don't match that, you could have just a turnaround like you just can't believe. So always watch this March time frame and watch this August to October. See, it's all the same thing. When you look at the Dow, the S&P here, it's all really the same kind of a thing. So Basically, what you want to do is run it up, buy it at the end of October, and run right on up. Now, again, I scalped the TQQ, which is basically a good trading vehicle where you can scalp this all the way through and still make money even on the downsides of here in that August, September, and October timeframe. Okay, let's see what we got next. Okay, I'm going to be closing out here the weekend edition. Now, just go over a couple just simple things. Remember, scalp is basically day trading. Okay, long-term trading is 6 months, year, 5 years, whatever. Swing trade, you're looking at 1 week to 3 weeks, and there's a lot of stocks you can do, like the Apple I told you about, where you can buy it 2-3 weeks ahead of time, run it into earnings, and then dump it and do that 4 times a year. That's for cash flow. And always what you want to do is try to look for stocks here. If you want to hold longer term, make sure they pay a dividend. So you are getting some income as they go on. Okay. And then remember, simple SMAs is basically simple moving average. I use the 8, the 21, the 50, 100, the 200 day work really good. Price channels, basically they just aligns of the recent highs and recent lows. Okay, and it makes your charts very easy. Okay, use volume. Volume is very good. And then RSI, relative strength, and always look for divergences, negative divergence, positive. That gives you a little bit of sign, a little tell of what's going on. Same with the MACD. That shows you that the momentum, that green's over that red, that gives you momentum on a stock or ETF or commodity or whatever. And then what you do is always look for any kind of positive divergence, negative divergence, anything that'll give you just a little bit of edge. And then always remember the 3-3 rules, okay? Opinions, no opinions. Excuses, no excuses. Feelings, no feelings. Leave your emotions at the door, okay? And again, if you get to a point here where you say, geez, I just can't make the money, go back to that. That's what I started off with, okay? Make so much a day. If it's a 50 or 100 or 200 or 500, whatever you think you can make a day, just take, like say, only 10% of that and say, hey, this is what I'll make a day. You start that on Monday. By the time you get to Friday, you say, oh my God, look at this. Look how much cash I got, okay? So always remember those basic rules and always use stops, okay? Just figure out what you can lose. If it's 1%, 2%, 10%, whatever it is, okay, just put limits. And another thing is to don't be afraid to take money off the trade, okay? You're never going to buy the bottom. You're never going to sell the top. Once in a while, you're going to get lucky. What you want is that meat in the middle. Don't be afraid to say, hey, I'm taking that money, I'm putting it in my pocket. I can buy this up again. And then whatever you do, if a stock falls off the map, don't go and you own it. Don't go and just keep on buying more and buying more and buying more. That is a loser way of trading. Okay, so those are my tips for you this weekend here. Hope everybody had a good time, and I'll see you later on tonight at about 7 o'clock, and we will post crude oil here and natural gas and get you all set up for Monday. Thanks for watching.